Yeah. For those who don't know, I'm Mike. I have a real estate problem. I don't have enough of it. Originally a CPA, but didn't have the personality to be a CPA. No offense if there anyone on here, but just wasn't for me. And then I worked for Dan Gilbert, who owns Quicken Loans in the Cleveland Cavaliers, and I was working with his startups, just teaching them how to scale and grow. So anywhere from esports to technology to media production, I was teaching them to scale their business. But I wasn't listening. I had two single families and just was not. I realized I was teaching people who wouldn't listen to me how to scale their business, but I wasn't listening to my own advice for real estate. So I took a year off, networked with people, moved to Chicago, um, just to be closer to those people who aligned with better. And then worked for free as an analyst, helped promote meetups, did what I could just to get in the room. And then 6 months later, joined, I was the acquisitions and asset manager for Jake and Gino for 3 years. And then we did about our end of June, left, moved to Nashville, uh, and in total have, but I hate flexing it, but it's like 663 doors that I own like a minority share of. And yeah, just really passionate about like systems and, just building a team. And that's been like the biggest evolution for those, like, as you continue to join this, you always have to evolve. And going from the operator to like the CEO, that's like been the biggest change for me in the last year, is just hiring people. And I have like two and a half virtual assistants, and yeah, just a good time, and taking over the world with my friends.
That's awesome. Love the two and a half, two and a half virtual assistants.
Well, I can't afford full time for the third one yet, so two and a half. They're a full person with real feelings.
Well, like my one of my questions is, I know we were going to talk a little bit about like asset management and stuff. What are some of the key skills and stuff that you think somebody needs? Like, I feel like when I came in first getting into real estate, I knew there were different roles, but it was a little bit hard for me to see what skills do you need or what qualities do you need for the different roles. And so specifically, if you're looking at asset management, what are some of the skills that you think people really need to either have or develop?
I think the biggest thing is just the ability to hold accountability. And as the asset manager, I think one of the things I absolutely hate the most is, I hate the term that you manage the property manager. Just because you did like a terrible underwriting that's unrealistic to execute, and you underwrote it poorly, and now you're pissed off at your property manager for doing a bad job, like that still falls on you.
Hmm.
So I always say, like, you work with your property manager, because love them or hate them, your third party manager, they all suck in their own unique ways. Like, they're not perfect, that's fine, but you have to play to your strengths. One of my property managers is not the best with financial reporting. Given my background as a CPA, I can live with that. It's because I just know where the money is and how to follow it. And I think another thing is just being able to ask really good questions. I can't fix anything on earth. Not my If it's a spread, if it's not a spreadsheet, I can't fix it. But I know the questions to ask to go, when will this unit be ready? When can we expect it to get at least? And then you bet on those days, and if it's still not ready and it's still not leased, the Chris Voss how questions, how can we prevent this from happening again, and just making sure we're improving our systems every time. So I was like, if it's late and we didn't get materials, let's do the 30-day inspection so we can order them, and just like tweaking those systems. And I think the bigger thing too is just being able to hold each other accountable, because if you don't hold yourself, the property manager, accountable, your investors will hold you accountable because they're not getting paid, and that falls on you. Um, I think that's just the biggest thing. I think a lot of people overcomplicate asset management. It's really three numbers: physical occupancy, economic occupancy, and cash. If you don't have people in, you're that's the biggest problem, and nothing else matters. Once you get people in, the biggest thing is, are they paying? If they're not paying, it doesn't matter. And then lastly, if you have people in and they're paying, how much cash are they? Your only risk is overspending. So just making sure that you're doing those things to make sure you're dialed in.
Yeah, that does make it really simple. I don't
Yeah.
like if anybody has any questions, this is kind of a Q&A, shoot them out there. If not, I mean, I'll keep asking questions. My other question real quick is, are there specific books that you feel like were really good for asset management, even related to asset management, or just kind of hard skill, soft skill type books? Chris Voss.
I think Chris Voss is just like a really good book. I'm regrounding because I'm sure everyone on this call has a like we got an offer accepted, but the person wants their price contingent on the gold to the US dollar index because he wants to buy gold as soon as he sells. Eric, I don't know what you said, but I'm sure it's what I said in my head, but much worse. But like I've had like people are not rational right now as sellers. So it's literally asking powerful how questions like how can we get this done? Like the accusation audit. So that's like more on the acquisition side and just holding people accountable. My go-to book is like the best ever apartment syndication book. I literally read that book an entire weekend because I was like, whatever I do is like, I mean, obviously I didn't retain everything, but it's just like, as long as I went through it once, I could feel like I understood something and I knew that was my highest and best use. But I don't know if there's like a huge asset management book. Trevor threw something in the
Yeah,
chat, which I
Gary
trust
Linsky and
Trevor's.
Cal Mitchell wrote a book called The Best,
Oh, yeah, they did.
and it's awesome book. I highly recommend it.
Thanks.
Yeah, I need to do one of those books, but I don't want to read it because I don't want to just rip off their stuff. But I think the biggest thing with just the asset management is like you just have to. I don't know. For me, there's no book. It's 10 years of hating accounting that made me realize it because it just every business is top line revenue. So in our apartments, the first line is rent. So how do I get rent? I get people in and I have rents and I have people paying those rents. So I just always think of like just like the income statement all the way through. It's like income is the most important. I think another thing is just implementing like Rhino instead of security deposits. So living in Chicago, you literally had if you charged a security deposit and didn't give the 10 cents of the interest accrued, and that literally every lawyer would take the case, you'd lose 3x your security deposit and plus legal fees. So it's like, oh, how do I get that off my books as a liability to the resident versus I can make $500 a move-in fee plus use Rhino to protect my property. And then that way, 500 times, I think, 20 units divided by a 5 cap. It's like, oh, wow. By implementing one thing, we increase the value a ton. That I don't think a ton of people, I'm sure people talk about, but it's a lot easier to implement. Rob unmuted. Do you have a question, Rob?
I did. Yeah, I was about to jump in.
Yeah.
Thanks, Mike, for jumping on. So a couple questions. One, just out of curiosity, where predominantly you focus market-wise, and then two, regarding you've talked about, excuse me, Chris Voss and the book. As far as the book that you're referring to, I know you're talking about because that's actually stuff I want to order. Never Split the Difference. If you're referring to that book,
Yep.
and then oh, you are. And have you done his master class at all? By any chance?
No, I
Okay.
just started asking how questions as soon as I read it, and that's like the biggest it's like a language. You implement it all the way time. I use it like one of my favorite things with brokers too is to mislabel. So I would always like mess with the brokers. I go, that's like this place used to be a brothel or a hotel or something like it clearly isn't. And then they're like, actually, because humans want to be correct, they will overcorrect and tell you everything about the property. So mislabeling and just asking how questions, because if you give someone the accountability, the date, and then they mess up, it's like, well, how did this happen, and how did it never happen again?
And then any specific markets that you focus on specifically, Mike?
Oh, yeah. So I'm in the Nashville, MSA, Chattanooga. I have solid boots on the ground in North Carolina now that's been hitting. And I like Huntsville, Alabama, but been close for the last couple of years, but haven't got anything there. Those are kind of the three. I've been thinking about San Antonio, but it just I've been getting a lot of deal flow lately, so it's like, does it make sense to do one but also hop on a plane versus like a couple hour drive? So, but I think the biggest thing I've seen like for newer people is a lot of people want to do the job themselves, all like a single family, like let me buy a house or let me buy a 5 unit and now let me manage the 5 unit. And I'm telling you, the biggest thing to your success in this industry is no one's asking you to do every role. Just be really good at one of the roles, finding it, funding it, or managing it. And just be really good at that thing. And once you're really, really good with that, you can literally scale to each of the next parts. But also, it's like, look at it as like, I need to find the right people in my group, because there's no point if you have a really good deal that's $100 million and you have no money to buy it. Like, it doesn't. So I think it's just looking at that as like the people in your group. And I hate referencing who, not how, because I think a lot of people have become visionaries without doing the work. But it's leveraging of who in my network fills this role for me and my team.
Thanks.
Yeah. Neil, are you going to be nice on this call?
Feel free to pipe in with questions. No questions.
Oh, yeah. Let's, yeah.
I'm always
And everyone can
nice.
ask a question.
I'm
Everyone
a
can-
nice guy.
No one said you weren't, but you were a
There's
little.
other guys that aren't nice.
Neil has a problem with brokers and being nice to them. And that, we've been working on that with betterhelp.com. So,
Can y'all hear me by chance? Hello?
yeah, no, you're good.
Hey, I missed the first part of your spiel, but how'd you get into asset management? Why'd you choose that one specifically?
I got into asset management because that's a good question. I think I just filled a void. So originally I was like an analyst, but then I realized like when I joined like Jake and Gino, it was like, oh, I'm really good at like being that CFO aspect. And just a lot of people are really good at buying deals, but they're sometimes getting neglected once you buy them. And so I'm just really good at just creating systems around it. Like my VA does a lot of my asset management, just like the reporting side. And so I think it fit my skill set at first, but I realized I didn't want to do like that role forever. And so it involved into acquisitions, which I never called people. And I was like, which if anyone's like, I don't know how to cold call or, cold calling or calling brokers, Fanatical Prospecting is the only book you need on sales. Gives you all the scripts, texts, emails. I read that book and literally just like, it gives you a script on how to call brokers.
Really?
And it's literally explains it very, very well of like this behind it. Cause I know people like, I'm really personal on the phone, but I like didn't understand the art of the dance of the sale. Like, I'm calling because I'm looking for a deal. Or I'm looking for X. And the reason I'm calling you is because I saw you on this site, like on LoopNet. So it's just like, it's very calculated. And your broker call should be no more than 10 minutes. It's like if it's 8 minutes, I get added. I'm like, what's going on? What is happening right now? So not to be impersonal, but it's just like, if they're talking to you for longer, then that means that they're not calling owners and not making money.
Good to know. I'll
Yeah.
test that theory out today.
Well, it's Saturday. If you get a broker on the phone on Saturday, they might either hate you or love you, but respect the hustle on that.
Maybe I'll shoot
Fanatical.
him a text first.
Yeah. Fanatical Prospecting. Yep. Yeah. And you don't like it. That book is really good if you just need scripts, but it does like email, cold email, tech, I think text, social media. I treat that book just because everyone's super busy and no one needs another 200-page book to read. But like, go through the scripts. That one I wouldn't buy Audible just because it has the scripts and you can make it. But yeah, that's a great book to buy.
Cool. Thank you.
Yeah, of course.
Mike, I'm sure this is probably a question that other people who are newer would want to ask. How did you find your team? Or how did you provide value when you were new and starting off? Did you join a GP team as an asset manager and was just going just to get the reps and the experience? So maybe tell us a little bit about that.
Yeah, so I moved to Chicago to be closer to I don't know if everyone knows John Kasman, because I know my bigger pockets. He said, come to my first ever event. I'm like, yeah, I want to show support because he's originally lived in Detroit at first and then moved to Chicago. I'm like, yeah, I want to help support him. Uh, and then from there, it grew to like helping evolve his meetup. And then I went to best ever conference and literally someone posted, I will pay someone to underwrite our deals, and 2,000 people applied. And I'm like, I will work for free. And then everyone, the people called me like, we would pay you. And I'm like, yeah, but you called me. So it worked. And I had like, I was good at Excel. So, which I tried to like, I didn't like accounting so much that I tried to deviate from that, but I just kind of leaned into it as my like strength. And I just learned a lot from groups that were buying deals. It ended up being, it's Viking Capital, who I was like first just underwriting for free and doing it once a week. So learn from there and then just join. Because of that, I had the experience, not an experience that not a lot of people had. And so joined Jake and Gino, and then got on GP, started getting slow increments of GP shares on deals and continue to scale. And then I think the biggest thing was July of last year, we bought a 36 unit outside of my job, and it went really well. And that gave me the confidence to go, okay, I know what I'm doing. That's like a 2-year process where I was underwriting every single deal in all of my markets. And I would say the work-life balance was not ideal. So like, I mean, I like, if you invest in it, like people would always post like doing due diligence walks on Instagram. And I'm like, oh yeah, we didn't even offer on that property, but I'm sure you'll do great with it. And then they never closed. So was I neurotic and psychotic? Yes. But I was just that passionate to get a foothold in the industry and like never lose that edge. So I'm not saying that's for everyone, but it's just that's how I was like, I wasn't willing to get outworked in my markets. And I literally, brokers would call me and like, hey, what city are you in? Because they knew I would just either be in Lexington, Kentucky, Huntsville, Nashville. Like I was always on the road. There's got to be questions out there.
I was gonna say, I'm sure there's other questions.
I have a question. So,
Yeah.
what kind of value adds are you looking right now? Like for any small properties or bigger properties?
That's it. So I think the biggest thing right now, it's hard, it's tricky with lending on like the heavy lifts. Um, because the heavy lifts right now, it's just lenders aren't willing to lend as much as they used to. So I've been underwriting 50 to 60 loan to value, which means I have to bring that much money to the table to close. But we're looking for like medium to light value add. The heavy lifts have to be like rents are $300 and market's 1,200, and it's but it just, we're looking for deals that just value add in terms of there's a rent, there's a delta in rent from it's a class B property. I still don't like the class A's. I think they're good on paper, but what I've seen is class A's go down first because they're playing concessions. So I'm like B to C. I'm trying to get a little bit more away from C, but if it's like I'll still look at it. 1970s or newer, doing rent increases, but like other income, I think a lot of people leave money on the table. 7 to 12% of your other income should come from other income. And so pet fees, move-in fees, late fees, facility fees is one we've been looking at just because it costs money to hold amenities. And my favorite one is, we call it's poo prints. And so if you have a pet on your site and you don't pick up after it because all the dogs get DNA tested, your maintenance can like take a swab, get it tested, and then you get whacked with a $200 to $300 fine. So there's just like a lot of different things you can implement. I don't want to nickel and dime our residents. I think everyone talks about rubs, but there's creative ways that add value to the community that, like for poo prints, like that solves a problem, because on our net promoter scores, people would be like, no one picks up after the pets, and yet like freaks out. But you have to add like a value to the community instead of just charging them stuff. So
There's a question from Nico here. Mike, do you feel that you can get more in fees than pushing rents? Is there psychology behind that?
Is there? I mean, that's very philosophical. I mean, we push rents and fees. I think it's just it's the carrot. So I mean, for residents, it's the carrot or the stick. But also, it's like, can we add washer dryers to the units and charge $25 to $50? I'm not also trying to get market leader rents, trying to get market rents, but not market leading rents. But it's like you can't just charge something to charge it. I think it has to add value. And I think the residents would be like, cool, another cost, but at the same time, that's just the process of it. Things are costing more, so you have to either reduce your costs and or profit. So they're definitely a fine line, but it's just start with rents and work your way down to other income, because rent's the first line on your income statement.
Hey, Mike, I have a quick
Yeah.
question. Recently, the term creative financing has been thrown around a lot. Do you have any experience or have made any offers using creative financing of any type?
We have. Oh, sorry if that was me. But we submitted an offer on a $12 million apartment complex in Denver. Essentially, it came down to price or terms, and they picked price, so we picked terms. Knock on wood, because we're still going for it. I think they wanted, it's like a 3% interest rate, 77 loan to value. It's like, it doesn't make, and they're carrying the whole thing. I don't have a ton of it, and I think that's just more of our market. Because in Tennessee, we haven't seen a slowdown. Like, rents finally slowed down. Like, before, we were just like, every month we're like, well, we get 10 applicants and we get one. But I think the biggest thing there is just there's a lot of education that goes for it, and the sellers that I've talked to a lot are just really, really, really old. And I know that's the opportunity, but like, they barely want to see a 5-page PSA, let alone hear this financial engineering structure that I'm presenting to them too. So there's a lot of education for it, but you just have to invest a lot of that time.
Yeah, that's what I was going to ask, Mike. Were you the one presenting the option to them after, like, it wouldn't make sense under traditional financing?
Well, so Bill Ham has an amazing book, and he bought 400 doors without a bank. Like, he did it all. I did not present it, but I was working with my partner on it to present it. And you have to make it work for you with that option. But it's just a ton of back and forth, because like, if you think of lending, there's the loan to value, there's the interest only, there's the term, there's amortization, there's so many, like, there's not like like, if I told you 80 loan to value in this market at a 3% interest rate, you'd laugh at me, but someone's willing to do that. So I think it's just working with your seller and asking, what do they want? Do they want a down payment? Like, how much do they want at close versus how much do they want to cash flow? But I know buddies who have done 40-year AMs. Like, it's the Wild West, man. You can do what you want, but I think the biggest thing to ask the sellers, what are they looking for at close and cash flow?
Awesome. Thank you very much.
Yeah. But Nico, you're gonna get on my shit list, because I always tell all my students that you're never allowed to say everything's overpriced, because you're not the right buyer for it. And I've had more in the last month. Brokers have told me to not underwrite a deal because they're looking for a 1031 buyer in California. So if anything, I'm like, thank you, saved me an hour of my life. So I don't know. I think I don't think it's overpriced. It's more of a function of sellers want to actually sell now. In Tennessee, like, literally, I think it was 3 to 6 months, people didn't realize interest rates tripled. And if you guys don't know how interest rates are based off, it's for community banks, I think it's Wall Street Journal Prime, but I always look at just the 10-year treasury, because that's where agencies are. and I saw yesterday is at 3.5. So usually you're 200, just given how quickly things are changing, I'm at like 250 basis points higher. So if it's 3.5, that's what, six. So, but if you go community banks aren't as dynamic on their pricing, so it may take them a while to adjust.
Hey, Mike, I have a very specific question about, you mentioned other income being about 7 to 12%. Specifically with the laundry facilities in your properties, do you own the washer and dryers, or do you have a company that you contract to rent those out and then you just split the difference in an agreement? I was just wondering how it works maybe down south versus in other parts.
Yeah, there's a company that does it, and it's kind of like Comcast. They all suck in their own unique ways, but I think I'm gonna move to 2020. You have to have the right team in place and systems, because if you have a big enough facility and you buy all the, you have a whole team just working on those and servicing those. So I don't have the team right now. So we're literally just using a company right now and splitting it, because right, the last thing you want to do is, that's why I say working with your property manager, because you don't want to be like, here's 40 washer dryers, figure it out.
It seems like it'd be so much easier to hire a company, and then obviously whatever your profit agreement is between the company, that's fine. Yeah, it just seems like it'd be so much easier to do rather than try to individually service washer and dryers, because nobody really wants to do that anyway.
No. And then it's just your residents could throw bricks in the washer and go, I don't know what happened. Like,
Yep.
weirder stuff has happened in property management than that. We found gators, like people have like, people have had like dog feces everywhere, but the dog passed 3 months before, and it's just like, you'll smell some things. So I didn't mind the mask during COVID, because like, whew, rough. You'll never unsmell that.
Mike, I have a question.
Yeah.
If you're dealing with more like 20 to 40 unit, do you incorporate anything on internet and cable, like trying to get a master plan on that? And if so, how do you work that?
Yeah. Kevin Gardner, who I use for anything cable internet. I know the FAA had like a ruling on it. Just because what was happening is property owners were getting rips, but then they were having like the worst internet ever. But Kevin Gardner, multifamily solutions, he, even during due diligence, can see if you're eligible. 20 to, I know the cable contracts are trying to get more bigger stuff, but you never know, and he'll do it for free and he gets just a commission. But during due diligence, you can send him an address and he can let you know if there's existing or if anyone wants, but it's very market specific. Like in Tennessee, they want bigger units. His biggest markets he's seen this year, I talked to him, is Dallas, and then the Carolinas have been booming with stuff. So, but every market's different. He's super nice guy based in Ohio, but very well put together. But that goes back to the who, and give him a call and he'll let you know.
Okay, thank you.
You're welcome.
Mike, with this market, have you changed your way of underwriting in terms of value add, as far as scope of work, and the price that you put on, or budget, I should say?
Yeah, I think I've gotten more picky, and I think the biggest thing I start with is my loan to value. And it's funny working with just like students and just coaching. No one had a loan to value as a buying criteria until like 2 months ago, which is funny because it's like, if you're making 8%, who cares if you're putting 40 or 50% down, as long as it's a good deal on paper and it hits the fundamentals. So I think I'm buying, I always look at the deal at 50% and then 60% loan to value, because what happens is in your 7% interest rate environment, and you have a 70 or high leverage, your cash on cash just goes away. So doing lower leverage in terms of that. I mean, I was super picky on deals before. Um, we probably missed out on a ton of deals by being too picky, but that's fine. I mean, I look at this as like, can I go to sleep at night? Um, and then it just depends on the deal, right? Like, so I've been trying to actually kind of underwrite quicker. So it's like a purchase price plus closing costs plus reno budget. Does that hit the market 1% rule? And I'm not comparing like class A bougie stuff to like a 1960s. I'm also focusing on nicer assets, so 70s and newer. I'm done with the 60s unless it's like our Denver, because we have the built in Denver in the 60s and older is way different than the Southeast. But if it's a smaller deal, I'm trying to make more money. So generally, in my worst case, I'm trying to make 5 to 8%. But dealing with these erratic sellers, I'm trying to make a little bit more in terms of just cash on cash because I don't know what's going to happen. But I've always spent 3% rent growth, 3% expense growth. I actually increased insurance 5%. And I just talked to my insurance person, and I'm not in Florida, so I'm going to caveat, or Texas. I know those markets are nuts. I'm going to caveat that. But like if you're in a flood zone, you could be getting 20% insurance increases year over year. So just be careful with insurance. I think that's it. Anything else on other underwriting? I think that's it.
Thank you.
Yeah. Neil, you're smiling. You got something in your head cooking.
I'm just thinking about how I'm going to be nicer.
Well, that's a good, now that we have a group of people to help hold you accountable on being nicer to brokers.
I'm going to be nicer by finding the who. Because I don't do the dance. It's the city in me. I don't do the dance.
So your hips lie. Copy.
My hips lie.
And another thing too is real quick is just I don't do any cold calling off market. I just like call brokers every day because their job is to call 100 owners a day, and I don't have time for that and would kill myself if I had to do that. Not so for those who are like, should I cold call to get these off market deals? It's like, oh no, just keep calling brokers and they'll find stuff for you. I'm sorry I interrupted someone's question.
Hey,
Mike, it's me.
Mine.
Oh, it's Monica.
Sorry.
No, Neil, be nice. Let Monica talk.
She's blocked by my little chat box down there.
Yeah, sorry. Well, yeah, I just wanted to ask the asset manager role. How much of the role is the financial and KPIs and that aspect, and how much of it are you actually working in operations and managing the property managers and that side of the job, let's say?
Do you want to change the question to like, do you think this is my job versus I don't think it's my job?
No, I'm just curious because I think sometimes like some I see some asset managers put more focus on the financials, the KPIs and those numbers, and some are more into the operations of the property, especially when you're doing a value add and there's a lot of shifting that has to happen. I mean, how much of it is that you're looking to see what's being done, what's being implemented, and then the other stuff is like, okay, we're hitting the metrics.
That's a good question. I think, well, I'm very biased, just my background CPA, because you can't fluff the numbers. And I always pull directly from the accounting system, because then if they're like, oh, that number isn't correct, then their system is broken by not updating it. So I think you can't go like super focused in the ops and let all the numbers fail, but it's also like only 3 numbers I'm saying: physical, economic, and then cash. I do care reputationally. Like one of our residents would like, this guy was just not a good person, not a good person, we'll say. And he would just rip us up. He goes, My rent went up $300. It's a single guy in a 2-bed townhome. And his rents was $775. Market was $1,300, and we bumped him to $1,000. And just like berated us on Facebook, just a ton. So they're like, there is reputational risk in operations, but I like to do is once a quarter, we'll say, I'll have an investor call the property just to try to do like a secret shop. And we've had a stern talking with our property manager because they never answered the phone or got back to them. So
Well,
operations
to that
is
point,
a piece of it.
yeah, sorry. And to that point, like is 3 months a good amount of time to wait to find that out, right? So, and you know, and again,
but
there's always
you-
going to be that like tenant that heckles you, you know, that on Facebook and you know, or Yelp or whatever about the property, but like, how on top of that as the asset manager do you really need to be?
Well, I'm not losing sleep. Well, in our system in Appfolio, I'm checking text. My VA checks the text messages. So there's like a texting service, and part of our system is on our weekly huddle. If someone's late, she'll check the notes and the text messages to confirm any communication. You know, I'm not, it's like for those who are asset managing not full time, you know, it's a cost benefit. I'm like, am I gonna lose sleep over this one resident who called us a piece of shit? No, but you kind of like, let's put it this way, you know, if your property manager is doing well or not doing well, and what they're good at and what they're not good at. So, if they're not very responsive to you, they're not going to be responsive to the residents, and that's a problem. You just have, but like I said, they all stuck in their unique ways. So it's like, is it good? Are they good at reporting? Are they good at this? I mean, I had a vendor who's like, yeah, our property manager hasn't paid floors in 3 months on any of his clients. So I was like, good. So, I know Monica very well, so I'm going to tell her this is like pick and choose your battles. But like at the end of the day, it's like if I would never self-manage unless I had like 2,000 doors. But yeah, you know if it's not going well based on other metrics, we'll say.
Okay, yeah, because that's, I mean, one of the things, and again, I'm going to just keep rolling with this question for just a little bit longer, but like a lot of times what I see, especially when we're doing these types of calls, is a lot of people are focused on the additional income, right, that you're focusing on, but how much of that then gets translated down to the tenant journey and the tenant experience, because you're hitting them with like, okay, yes, your rent is $1,000 or whatever, but then you have this, like when they get their actual rental statement, this like laundry list of fees, right? So the pet fee, the rubs, the amenity fees, the move-in fees. Oh, the move-in fees would have been the singular, but I'm saying there's like 4 or 5 other items, and you sort of get this reputation for being like fee happy within a community. So like, you know, so often I feel like there's a focus on the financial, and that we're only looking at the financial, but how many people are actually stopping to look at the tenant experience on the asset management side?
I mean, I look at it, and I've like offered my property manager, my VA, to help with that. I think I'm just because Rand was internally managed, I saw a lot of the stuff, and I care more. But I mean, not to be like just total corporate devil about it. It's like at the same time, we've told our investors a number we have to hit. If the market proves that we can charge those fees, but it's just, you have to find your niche, and the market will allow or disallow. Like we tried, our property manager said that we could charge $125 for parking, and then we tried it, and then everyone's like, screw you guys, and they're leaving by the droves. And we're like, what the hell happened? And he's like, actually, we can only charge $50 for parking. We're like, you picked the number, and we picked the lower number. So like, it's all a test and measure, but it's a cost benefit, like of, you know, will this drive this away? But at the same time, it's a tough position to be in. But you know, at the end of the day, you could also just charge $300 rents, have market rents, and no fees. So you're damned if you do, damned if you don't.
Okay, so basically you're looking at the financials, but you've got to look at like the day-to-day for the, for the property and for the tenant as well. And you've got to have a little bit of a focus on that as well as part of like your asset
Oh
manager
yeah.
role, right?
Yeah, like we're not we're not getting market rents by like I hate one of the things I'm very cognizant of is like, yeah, we increased rents $300-400 and we didn't do anything. And I was like, well, I'm not, and then I'm like, well, we renovated, they just, you know what I mean? It's just like you have to take pride in ownership. So it's like we did the new sign, we're doing mailboxes, like, you can't just have a shitty property. I mean, we've seen a lot of them, but at the same time, you can't just be that operator. And I've seen a lot of that. And it's just right now when everything was going up, you can hide behind it. But when rents cool off and not do 20% year over year, we'll see who operates well and who doesn't.
That's exactly what I was thinking too. I mean, rent concessions has just been a line item on the underwriting for a lot of people for a long time. And I think those are going to start to have more than zeros in it. So I think it'll be interesting to see how much of that, like we raised 300 for nothing, and did nothing on the property is going to, fly. So yeah, that was my question. Thanks, Maggie T.
You're welcome, Monica. All right, now Neil, you can go. I know Neil very well too, so I just want to be, I'm not just picking on Neil for no reason.
Yes, he is. No. So in the beginning, you said as people during the asset management process, there are time you were talking about accountability, right? So what are techniques, strategies, penalties, consequences that you use to drop the hammer? Or
oh, my property manager didn't respond to me for a week, so I had my VA reply, did this get taken care of every single day? And CC'd all of our partners. Every day. They didn't answer. They didn't answer. So on our weekly call, boy, was I passionate about letting him know that that is not how we operate. So,
I'm good at being passionate.
Yes, you are, Neil. But like, I'm not like, penalizing him, but it's just like, I mean, there was times for 2 months I told, can you just fix this gutter? And I drove on a Thursday and go, if this gutter's not fixed, I'm gonna fire him. Because I lose my mind. Like, right, property managers are busy. I know I'm a pain in the ass. I ask a lot of questions. He doesn't charge me enough. I get it. And I know that on the front end. And I tell him, I'm a pain in the ass. But I am like, if you don't answer, I take that as you're not answering me. So, and I'm the owner. So what are you doing to my residents that live on our property? So I just take that super serious. And when my VA goes through our text messages, if there's an unresponded text, I lose my mind because I know that's not okay. So to Monica's point, I do care about our customer service. And to do that, Monica, another good way is the Net Promoter Score. So on a quarterly or monthly basis, you can ask your residents for like a $50 concession and literally just go, hey, on a scale of 1 to 10 or 1 to 10, how likely are you to refer us to a friend or colleague? And then ask why. And then give them their apartment number and you give someone a concession. And then you can see what the pain points are.
Wait, do you give everyone who answers the survey a concession, or is it like a drawing for a?
It's a drawing.
Like a drawing to win is 50 off on your rent type of thing.
Yeah,
gotcha.
Hey, Mike, I'm curious. How much rope do you give these property managers before you decide to fire them or take some other action?
You kind of have to have the next one lined up, we'll say. I mean, I haven't. I'm probably too nice, but at the same time, the property manager we were going to use, he had a stroke, so it was just like unreal time. So it just you have to line the next one up. You can't just be like fucking sick of you and I'm out, because now you're like shit. Now I have to self-manage this thing. So you have, and this is why I like being in bigger markets, because like if I'm in the middle of nowhere and I have to fire the only property manager, fuck, that's not a position you want to be in. And I've seen those, and I'm like, yeah, that sucks because you become the property manager, and your life is a living hell.
Thank you. Awesome.
Mike, what theme questions, what type of questions when you're interviewing, when you've gone through and talking to different property managers to run? When you work
I
alongside them,
ask
do you ask?
like a lot of investors who not to use or who to use,
Okay.
and there'll be very and I mean, apartments.com, you can see the property like in the top right corner. It shows who's the management company, and you can drive by those and see who's not doing well and who cares and who doesn't, and it's very obvious. And to be honest, for the bad ones, that's your off market list. Hey, do you hate this property manager too? Let me take that off your hands.
Mike, I have another question.
Yeah.
Do you have any recommendations? So on one of ours, I was meeting bi-weekly with the property manager who was like the direct property manager for our apartment. And I guess I went maybe a little bit too strong on what I was expecting her to do. And so now
passionate.
The person above her said, now she's my contact. And that particular lady I was speaking with is no longer with the company, but her replacement, they don't want me grilling them every 2 weeks, but I should go to the person above her and just speak with her on what's happening with the process and get the information from her instead of the direct person who's actually leasing the unit. Have you seen that? Do you have any recommendations for me?
How mean were you to this person?
I wasn't. I was just saying, I was just looking at big picture and asking what I thought were right questions. And, I was going behind saying, look, we've given you all these updated pictures. It's how long has it been? And it's still, they're not up. I think we should do this. I think we should do that.
Third party property management. I mean, you may have someone who's just pretty green and new and doesn't like property management. Their job is hell every day. I'm just like getting yelled at by residents. My rent's up. Like no one ever just high fives the property managers. Like, thank you.
Yeah.
So I think it's just having grace and like finding the line of like, what is the big thing we need to take care of today? And I think yes, you as the owner should care about all those things, but like, even if you offer like a VA help or something, just to like, I am willing to help you do this because this is our property. I think that could help. I don't care if they meet weekly if we're still making money and doing well and hitting our numbers. So they could do email. I prefer an email at this point because it's just like, it's me. What I found in property management, it's fundamentally, it's an hour before the final exam. And you finally are like, okay, now I can study before the test. Not the best strategy and not a good business plan, but that's a lot of property managers don't take enough time to like prep for it. And so it's tough because their industry is tough.
I think my problem with it though, it's almost like they have more the mentality of, we've been doing this a long time and don't try to rock our boat. And so by you seeing other things that, looking at it from a different perspective and, we don't market on these sites. We only market like this. Well, it's not producing results. Why don't we try to market on this? Or why don't we try to put signs up or, but it's going against what they've been doing forever, and then, trying to break through that. And I think that's why they kicked her. That's why they kicked my connection out to the direct person, because I was trying to hold her accountable, maybe to what I wanted to see happen. And maybe the person above her said, no, that's not what we do.
Well, okay, so this is where I do my accounting brain, and this is like one of my favorite things to do are like, so for every day, so ask them like, what's market rent for this unit? And then go, okay, so I've given you pictures. We've marketed your way and it hasn't done well. We still don't have it leased. So every day that it's not leased, I'm losing whatever, how many dollars. So because we're not doing it this way, does that mean your company pays me X amount of dollars per day that it's not leased? And then of course I go, well, no, that's not how that works. I go, okay, well, how about we do this? So that we can get this leased. Since you won't pay me for not leasing this unit and doing it the way, how about we try a new way?
I'll try
And
it.
then, because then what'll happen is, right, then you remind them, well, every day that this doesn't lease, you're losing out on whatever the rent times that percent divided by day.
Mhm.
So it's like you're losing 50, $100, whatever that number is a day by not trying a new way. Doesn't that seem a little ridiculous? So,
Yep.
and if you, I think, yeah, message me if that works, because usually they're like, no, we can't pay you for not doing our job well. It's like, yeah, no shit. Well, let's do it a different way instead of just running through the same wall every day.
Amen.
But yeah, well, yeah, welcome to property management. They all are passionate. They're all unique in their own special way.
Thank you.
You're welcome.
Hey, Mike.
What's up, Sean?
What's up, man? In New York, we're having a couple issues with property management companies having labor issues. They're having a hard time finding and retaining employees.
That's not a New York thing. That's an everywhere thing.
Okay. I'm just making sure. Are your property managers having the same complaints, or is mine just full of crap? And how are you dealing with these?
Well,
Are you factoring this into anything that you might be taking off their plate or considering taking off their plate?
I'm underwriting for higher payroll.
Okay.
Because yeah, they tell you $1,000, but then they can't get people. So to get people, you have to pay them more, and to pay them more, it's going to come down to you. So bump your payroll or just your management fee to like the 10% instead of the 8%, depending on the size of the unit.
Thanks, Mike.
And Sean's been doing like a really heavy lift in Memphis and doing a really good job. So he's been kicking butt and taking names.
I'm not. That's all the we hired some right people.
Good man. See? Who, not how.
Anybody else have any specific questions real quick?
I did see one in the chat. As far as cash on cash in this market, what is your lowest number that you could say this deal is still a go? So when I underwrite, I do like taxes change day one, even though in Tennessee it's every 4 years. Our rents, much bigger CapEx budgets, lower leverage. If I'm making 5% in my doomsday scenario, I'm cool with it because I know I can tweak things and get a higher cash on cash. I'd say like 5 to 8%, but I think as you get like probably deal 3, what ends up happening is you realize your cost of capital may be too expensive. So like if Valerie's willing to make 10% and I'm willing to make 8%, I'm going to get the deal because I'm willing to pay that little bit more. And what's happening is just so there's been so much private institutional money coming in. It's like they're willing to make 4 because this is a write-off for them versus we are taking on investors and making money. So that's why I always just tell people like, I'm not the right person for this deal. And don't take it too personally because it's like a big institution is using this as a write-off to hedge against inflation, and we're trying to make 20% and 2x people's money. So it's different, but I say that to not deter people, but I think it's have realistic expectations of like, all right, this is just what I'm looking for, and just keep hunting and looking, and you'll find it. Like it's just a matter of time and just putting in. Like it took me 2 years to go full time to go. Oh, I get it. I now get it. And guess what? Now interest rates we're doubling every week. So like it's always changing, but that's kind of the beauty of real estate is that it's changing, and just buying good market fundamentals in terms of just population growth, median income in that area, jobs, and if you buy in market fundamentals, that's a lot of the heavy work will be taken care of by just doing that.
All right. Well, Mike, I know you've got things to do and we don't want to get you in trouble, but
it's all good.
He's at,
I'm not speaking, so we're all good.
Okay. Okay. Well, maybe we won't cause an upheaval. He's at the Jake and Gino event this weekend, so I appreciate you jumping on. But yeah,